elevator pitch is in three parts. One is who we are, two is the property, and the three is what we're going to do with all these things, putting them together. So I'm going to start with the strategy. The elevator pitch is we might be considered to be different to a lot of junior gold mining companies in that we do have a very clearly defined end game. We start with the end game, and the end game is we've got something that we're going to sell. Somebody is going to buy this thing, and we've worked very hard to make it more valuable. So that's the deal. We're not going to drill, we're not going to explore, we're not going to build. We have something that is what it is. It's a fully permitted, ready to go, strong economics in Nevada, a gold property, and it is going to one day be put into the hands of somebody who is going to take it forward and build it. We're not going to be those people. So that's the first part. And in that, there is no question or speculation about what we have. It's not like an exploration play. So the second part is the people. We've got a very good team. The Mag Silver Platinum Group Metal West Timmins team. I think the West Timmins was a 24 bagger. The Mag Silver was a 56 bagger. I'm bragging it up a little bit. We hope to approach that with this. No guarantees, of course, but that's the team. We're 76% held institutionally. There's Peter Palmetto at Sun Valley Gold, owns 46%. He's the chairman of the company. And then 25% or so, Ruffer, Conway VG, Sprott. They all like this story, obviously. The third is the property, and that's an important part of the piece. You have to have a very good vehicle to execute this strategy. So it's Nevada, it's a 1 million ounce resource, it's well drilled, it's well studied metallurgically, it's simple, it's robust economics. I'm going to quote numbers from a February of this year study that we updated, so these are current numbers, 51% after-tax IRR. It's about an 8 or 9 year life of mine, 71,000 ounces recoverable gold per year, so just short of 600,000 ounces recoverable gold. The numbers that go to drive that high IRR of 51% are low strip ratio of 1 to 1, good metallurgy of about over 70% on a heap leach, and the overall mining is very simple. It's two hills that stick out of the valley. We go to the top of each, we start mining, and we mine them down, and it's as simple as that. The stage of the property is beyond studies. We did update the pre-feasibility study in February, but right now we are ready to build, fully permitted federally and state. We have issued for construction drawings. We've done the engineering. We have a level 3 construction schedule. I'm just trying to say studies are a little bit in the rearview mirror for us on this project. We are genuinely ready to build. So it's there, it's in the storefront. There's a bow around it. There's no time that we have set where we want to put the property into somebody else's hands. The time will present itself. And the number, and I know this is going to be a question you're probably going to ask, do you have a price in mind? And the answer is no. My boss might have a price in mind, but that will become revealed in the fullness of time. Acquiring the property was an interesting process, and it was quite purposeful. I joined the Mike Jones, Frank Hellam team. They had an exploration company that sort of grew out of West Timmins. West Timmins was a big success. They said, we're never going to do any more gold mining. We're going to focus on platinum. Platinum group metals was their big thing. Anyway, somehow or other, a week later, they'd started another gold mining company and went exploring. I came in a few years later. Things were quiet in the exploration space. I'm a mining engineer. I like to develop things. And I suggested to Mike Jones, my boss, the CEO then, if I find something, can you get the money for it? And he said, go for it. We searched and we were running low on money. We looked and we looked, months and maybe a year went by, and we were just not finding something that we liked. And kind of at the last moment, we found the Hasbruck property. We'd always liked it, but it wasn't available. And it was only the troubles of Allied Nevada, which was approaching the bankruptcy they eventually went into. They accepted our bid for $30 million US for the property. So the golden ground strategy is not a new one, but it's not a popular one in the junior space, because the junior space is about going out and finding something. You start with an idea. We think there's gold here. Let's go and raise some money and go and find it. We'll drill, and it's great. And you can get great rewards by doing that. But also, it's incredibly risky. We know the numbers. We're not in that space. So it's de-risked in the Westvault story, the golden ground story, in that we know what we have. For sure, you only know exactly what you've got when the last truck comes out the pit at the end of the mine. But I think we're very safe to say we have a very good understanding of what we have. So we're not an exploration company. So the gold in the ground strategy has been used by others, and I like to reference Ross Beattie's Lumina Copper. In the early 2000s, Ross Beattie correctly identified copper was at an all-time low. I forget the price. It was 30 or 60 cents a pound or something. And nobody loved copper. And he said, this is the perfect time to go and acquire. He built up Lumina Copper. He went for big properties. The biggest one was Taka Taka in South America. I think it was bought by Sumitomo. And he didn't put a single drill in the ground at any of those properties. He bought at the right time, he bought the right things at the right time, and he waited until the market turned and he sold them. So certainly this is not a new strategy, and we do follow in Ross Beattie's footsteps a little bit there. We buy something good, we bought it at the right price. Someday it will reward the shareholders for that planning. And our job right now is not to spend any money on it. We are against dilution. We've got $4 million in the bank, US. That'll take us about 4 years forward before we need to go and find more money. Additionally, we're saying the time cost of money is such that maybe some of that money that we would only need 4 years out, maybe we should buy back some shares. So we do have a share buyback program running at the moment. We think we're bouncing between 85 and $1.05 Canadian shares. I think we've held up pretty well in the current market, where a lot of our peers and so on have trailed off a bit. We've held up pretty good. But at 85 cents or $1.05, we think it's very undervalued, and it's a good use for cash. Let's go and buy some of these back. I think the key determinant is can they write a check that'll clear? Once we get paid, we really have very little interest what happens to the property after that, depending on the deal. If we have a continuing interest in the property, obviously we would be very interested in the quality of the people that we would want to have take it forward. And I think we're probably wise enough and have made enough mistakes in our collective careers to be able to identify the right people to take it forward. It would have to be an experienced team, well-funded, big enough, and they've done it enough times that you'd be able to say, yes, they're going to take it forward safely and build it into a mine, because it's not a simple process. There's nothing to change on the project itself. We can't make it grow. We could make it go bigger, arguably, by drilling, but we're choosing not to. We could make the whole company go bigger by maybe acquiring another similarly advanced property. If we like what we've got, then we'd probably like something that's twice as big, but we're not choosing to do that. So the ball is not in our court. The ball is really in the gold environment, the gold spaces. Whatever happens there is going to be the driver. And there'll come a day when there's going to be some producing company out there who says, we've got a hole in our production projections. We're mining a lot of gold right now. We need something else to fill in, though, to add to those 10 years in that time going forward. So time's definitely working on our side in that regard.
Yeah.
And sorry, and just if I could, James, just to add that, why would an investor invest in something that seems to be slow money? And I think that's your question. And the answer is, it's a trade-off between, we are low risk, but we're kind of a patient investment, as opposed to potential high reward, but very high risk and very fast moving exploration, which I would term more of a speculation than a true investment. If you wanted to say, well, look, I've got a mortgage on my house, I know what the value of that is, and I don't have to sell the house to know that I'm becoming progressively more and more, my net worth is increasing because I own that investment. I'm not going to take the bait and say that I know. The only thing, two things we do know about gold: it will go up and it will go down. Look, it is an investment. The person who is calling all the shots is my boss. He's the chairman of the company, Peter Palmetto. He runs $1 billion gold fund, very successful, ex-Wall Street. He's not in this to play. He's calling all the shots, so 46% position. What he wants to do happens, and what he wants to do is to make money for himself, his fund, and by adding on to that, any other investor who chooses to invest is going to be protected against stupid mistakes or bad decisions by investing in Westvault mining. They're in safe hands. So I think that's the second to last thought that I'd like to leave with potential investors and investors. The other one is, you got my number. I want to talk to you if you have any questions. If this is something that you're considering, we want a relationship with our investors. Please call me.